term. But our alpha manager is with us, Karthik Kumar, fund manager at Axis Mutual Fund. Karthik, good to have you with us here. Good afternoon. Thanks for your time. I mean, this is, of course, all pre-election results and, a bit of up and down here, but mostly up. That's been the trajectory. What are your thoughts, Karthik, about the market and how we are kind of set up in the near to medium term?
And thanks for having me on the show. As you rightly said, volatility in the markets have already, as you can go by the VIX numbers, the volatility has already gone up, indicating increase in uncertainty. And I think that situation will continue till we get clarity from an election perspective. But having said that, the markets dealt with that volatility pretty well, because essentially, depending on the index you look at, the indexes are up between 6 and 18%, depending on whether you're looking at large cap, mid cap, or small cap. And within that, essentially, the markets also, because we are trading at the higher end of the spectrum from a valuation perspective, there is search for value within markets, which is why you've seen value stocks from a quant perspective, from a style perspective. You've seen value as a style doing well, and that it was in fact one of the better performing styles last month, and that was after a brief hiatus of a couple of months. It's been the style over the last 1 year. So, which is why you're seeing value style doing well. And value stocks which have a growth tailwind have done even better. Case in point being some of the value stocks that reported better than expected numbers or gave out a good outlook have kind of seen disproportionate moves in their share prices. So I think that style will continue to do well from a purely quantitative framework perspective, especially the ones which also have a growth tailwind to it.
Hi, Karthik. Good afternoon and good to see you. When, pockets where there still could be value, could it be banks? Because they have been relative underperformers. Now they're playing a bit of a catch-up, particularly private sector banks. The PSUs have done well, though there is still value out there. So how are you positioned on the banking space?
So on the banking space, I continue to remain underweight the large private banks. I do have some exposure to PSUs. I have exposure to capital marketplace, capital market beneficiaries within the financial space, and that's how I'm playing it, because the growth visibility there is much higher as compared to private banks. So that's how I'm positioned within the banking space.
Talking about the consumer space, Karthik, they reported pretty decent numbers after a long time. Stocks have been under-owned. Valuations have come off compared to what they historically traded at. Would you start looking at accumulating consumer names? The staples?
I think selectively one could look at names within that space, but largely, if you look at consumers as a group, yes, the valuations are lower compared to what they've traded at historically, but they are still at the higher end of the valuation spectrum when you look at it vis-a-vis markets as they stand today. And if you look at growth expectations or even commentary or growth expectations in terms of hard numbers over the next couple of years, there is nothing. In most cases, the growth expectations has not gone up reasonably higher, which is why I continue to remain underweight consumer plays across the board, barring autos and auto ancillaries.
Okay, well, the sharp sell-off continues, 4 points to 5 points lower on the Nifty. So very, very swift profit-taking session underway. And it's actually on all the stocks. Banks and tech, which were the leaders of the day, they are the ones which are seeing the sharpest cool-off as well. Case in point would be a TCS, an ICICI Bank, even an HDFC Bank to quite an extent. And some of the financials like an SBI Life Insurance or even HDI Life. So, insurance companies, banks, technology. That's where the sell-off is most apparent. Karthik, hi, good afternoon. So, the thing is, at all-time highs, you wonder what's going to be the next leading engine. If this is to chug along higher and higher, do you think that's happening? Even if we get, we were just discussing this before you joined us, even if we get an electoral outcome which is along the expected lines, do you think the market has enough firepower to keep charging higher? And if yes, then which are the engines that will turbocharge it?
I think if we get the kind of verdict that the market expectation is kind of baking in, then I think there is you have to be selective within the market. You may see the market kind of being buoyant for a few days or a month after the markets, but essentially there is much more alpha to be made or much more opportunities at a stock level or sector level. And in that theme, I think some of the few themes that can continue to do well if the market expectations of the political situation kind of plays out, then it would be beneficiaries, would be capital goods, infra players, defense, power. I think these are some of the themes that will continue to kind of do well should that scenario pan out.
So, okay, so that means that you are not rushing to take profits right now from some of these themes because they've been running for over a year now. Defense, infra, PSUs, but you're still comfortable holding? You wouldn't be exiting right now?
Some of these sectors that I did mention are one of are my top overweights within the fund that I manage, and I do see a pretty reasonable growth visibility for these stocks. And despite the rally, the valuation is kind of in a decent space. So I still continue to hold the stocks in those sectors that I mentioned.
Right, Karthik, we were talking about pharma earlier. With Ekta. Do you own anything there, that space, and which one and why?
While I can't talk about stock specific, but I am overweight healthcare as a whole, and within that, it's a good mix of pharma and hospitals. Within pharma, while some of the stocks have missed out on elevated earnings expectations, the growth runway remains reasonably good, both domestically and internationally. The outlook still looks quite solid for some of these companies, which is why we continue to hold on to them. And we still think there is reasonable opportunity within that space. And it also acts as a defensive hedge from a portfolio perspective as well.
All right, Karthik, final question before we let you go. What about the metal space? That's where all the excitement is. Everyone's talking about metals. Sometimes that gets worrying because everyone becomes a metal expert. But what's your view? Do you believe that there is still a longer run out here? There's a bigger runway. You can still get in at current levels and make some money?
I've been kind of underweight on metals through this rally, so I've kind of not been able to participate as much as I'd love to. And part of the reason is I still don't see data at a stock level, both from an earnings perspective, that would give me comfort to say that that trend is persistent. So I still continue to remain on the sidelines with regards to metals and commodity plays in general.
By the way, ICICI Bank is now in the red. HDFC Bank is in the green, but it slipped 1.5% from the day's high. And Reliance Industries is a heavyweight, which is down over 1%. So these are some stocks which are dragging on the way down. Karthik, if you have to hunt for value, do the specialty chemicals name offer some promise, considering they could rebound in the next 12, 18 months?
Specialty plays and some other sectors which have underperformed for quite some time now, given the sheer nature of underperformance, one would be tempted to look at that space, and rightly so. But I still think one needs to be really selective in that space, because I still haven't seen a broader turnaround at a sector level, maybe at a stock level within some of these sectors and subsectors, but not at an overall chemicals as a space.
All right, Karthik, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here and speaking with you about the markets. Well, the index is down 16.